Hi. Hi,
Hi,
guys.
Dimitri.
Hi, Zhenya. How are
Hi.
you? Uh-huh.
Oh, that's a good question. Every time when you live in Ukraine, this question is not the
Oh,
random one.
yeah, right. That's right. That's right. I agree.
And how are
Terrible,
you? How are
terrible.
you, Dimitri?
Good, very good. Everything's
Yeah,
excellent on my side. Yeah, of course, as much as it can be.
super.
Yes, yes, yes. Thank you,
I'm
thank you, thank you.
I'm very happy that
Terrific. Mhm.
yeah.
Go ahead, go ahead.
If you don't mind, I will have this intro speech, just a brief one.
Yeah,
Yeah,
yeah.
good. So I'm very happy that we are hosting such a great and professional man as you are, and I'm happy to share this platform with you, this stage with you. Why? Because I know that we have faced and lived through very interesting cases together, very interesting challenges, and definitely there's so many things to share. This is the one part. The second one is this is our, let's say, the first webinar that we're gonna launch, and I'm pretty sure there's gonna be a numerous number of them because the topic that we're gonna go deep into is super broad, super important, and from my perspective, purely uncovered because people usually run their business in US with closed eyes, as I see
Mm,
that most of the people and most entrepreneurs, and then they just face so many surprises on the way to the success. And our role as advisors, you as a financial and accounting advisor, me as a legal counsel, is to guide them through these challenges with the less, let's say, troubles and less problems, which we can just learn at the very beginning or during our trip of the entrepreneur. So great to see you here, and we're
likewise.
gonna we're gonna talk about taxes today, right?
Yeah, 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 absolutely, absolutely. Thank you so much, Zhenya. Happy to be here. You mentioned that this is the broad topic. I remember when I was choosing this profession many years ago, I was thinking, oh, I just gonna go and specialize in tax. That's all I'm gonna do. But within that tax, there's so much, and then just maybe within one entity type, like it can be 5 lifetimes that
True,
somebody can spend.
so true, so
Yeah,
true.
interesting. Yeah,
And the first time I met you was in 2012 and
yeah.
2012, right? And I thought it's gonna be easy journey through
Right,
the US US business environment, but it was not.
right.
It was not.
Yeah.
And I just want to give you a chance to present yourself, to tell about yourself,
Okay.
few words, because there are lots of things to mention about
Yeah,
you.
yeah, yeah, of course. I will. I will. I will. Excellent. All right. So today, okay, I'm gonna mention about myself right now a little bit. Well, first, yes, we have this tax talk. So I'm here as myself and also in collaboration with iFindTaxPro Tax Talk. So we have various interesting and diverse topics covered on our um, uh, presentations online on Spotify and YouTube, including partially what we're going to be talking today about as well. So we have generated a podcast that talks about this. So I'll give you. So that's our one of our managers, and here's myself. So
30
Dmitry Kustov.
years.
So yeah, right. Yeah. More than, yeah, nearly 30. Yeah. So I came to the US in 1994. I already graduated from university before. So I started working in 1996, pretty much
Wow.
1996. So
Wow.
in this particular profession. Yeah, so right, so nearly 30 years experience founder. I have a firm, around a firm, Kustov and Associates. We are based in San Francisco, California. Um, we're practically virtual. You know, it's all around the world, all around the United States. I'm personally right now in Switzerland at the moment. So we're very much international, and one of the reasons that we specialize in international tax, like a good portion of our business comes from international tax. Yes, I serve on the AICPA International Tax Committee. ICPA is the body in the United States that sets some rules for accounting profession, as well as they come out annually with checklists and questionnaires and organizers for as a recommendation to other accountants. So I do this annual review with them. I do have a book, U.S. Startup Tax Guide, must read. So I think it's pretty interesting. It's pretty interesting book. It does cover very broadly U.S. taxation, and it's designed not only for businesses but for individuals, for mobile workforce. So if you want to come into the United States and do something there, I think this interesting book. And you know, when I was writing it, a lot of people were asking me, "Whatever you tell us, where can I read?" And I wouldn't be able to find one source, and so I put there everything that I tell clients when we just meet and
Mhm.
update it annually. So yeah, I've done quite a bit of speaking recently, including for
I
iFindTaxPro
confirm that.
Tax Talk.
I
Yeah,
confirm that.
okay. Thank you. You saw my presentations. Okay, awesome,
True.
awesome, awesome. And yeah, and you can find me on LinkedIn, you know, in LinkedIn with me. I would be happy to speak to you.
Super.
Awesome. All right. So that's
Dima,
yeah.
if you don't mind, I
Mhm,
will also give a small preview on how we met and why we decided to make this webinar or series of webinar. So
mhm,
I was a legal counsel at a quite successful startup with Ukrainian founders, and they have established entity in Bay Area, and when I joined the team, I found out that actually there is no much knowledge about what is going on in the company's executive team, how to run business in the U.S. So everything was just the run the way as a startup mode. So just the main thing is profit. We'll figure out how to deal with all the challenges in future when we're gonna have money. But while you run your pace, I mean, this run your journey as a startupper or just a random business, you're making mistakes unconsciously, usually. Yeah, you're just making steps and you're making these mistakes. And the point where we met with Dima, that we tried to solve troubles which were made by the entrepreneurs, my team, executive team, and they were just shocked with number of problems that they made. And after that, I understood that the USA is the place where it's very easy to enter, but you should be very conscious of running business there. So after 15 or 13 years of collaboration with Dima, I understood that we need to give some guidance, very simple, as simple as possible to people who wants to start business in US or already has a company there, how to just to mitigate those troubles they have already faced, or not to get into trouble while you're just setting up the business. So that's the background for our webinar. I hope we're going to make it on the regular basis. And the first point that I want to start is to ask your opinion, Dima. How do you think why why people, most of the entrepreneurs, local one or foreigners, get into trouble with taxes in the US? Because everything is online. You can read, learn, ask.
mhm.
But anyway, they're doing that
Yeah.
every year.
Yeah, yeah, that's true. Well, everything's online now. It's on ChatGPT. You can literally go
Yeah.
and ask all the questions you want. but I think, well, number one, it's very complicated, you know.
True,
You're right, you read it and you don't understand what it means. You understand the English words, but all the implications, where to look,
true.
how to do, and you really need to be in there for a little bit, for at least few years to understand, and you
That
have to invest a lot of time into it. And I imagine entrepreneurs, they think, rightfully so, the time much better spent doing what they do best, their main thing. And this is just so complicated. They just simply miss simple things. And in the case that you mentioned, I think the trouble there was that they were like very successful, very great, and they just went so fast. It just boom, and the IRS literally came in the same year. And this is the first and only time in my life when IRS came exactly same year when I filed tax return. I'm just, that's just crazy. So, and actually, sometimes I bring up that example. It's just so telling. You know, you're right. URS, I mean, US is very easy to do business, extremely easy. I found out by trying to do a little business in Switzerland. I can tell you, US by mile, by like 10 miles easier. You know, you can do things remotely. It was pretty much almost no trouble. But here is, even being here is very hard to get something done.
true.
But it's okay. It's okay. The before, but then they have all those gargantuan penalties. Like penalties are ridiculous. Like have $25,000 for not
Yeah,
filing form.
just like
Right.
that.
You see?
Just like that.
Right. And this is it. And you get those $125,000 bills. It's like, well, I'm just a startup. I haven't done anything. And this is so many people, if you only knew, so many people get those bills. And there are a number of ways to deal with that. But still, you know, who wants to go to sleep thinking, oh, maybe they're going to penalize me 125 grand? It's
Hmm.
not very pretty. Anyways, but the good news. I also want to say the good news. If entrepreneurs and their advisors invest a little bit of time, just a little bit of time in understanding ahead of the game, just structurally, at least to understand which steps not to make too soon. Okay, and what possibilities they have, what opportunities they have, and where to look if the danger comes. I think that easily can solve 80% of the problems. And I think that's what we're here today to address that 80% sort of case when you can just look at it. And we thought, and I thought it would be very relevant, given your Zhenya specialty, to speak about software businesses and software companies specifically. And so let's see what we're gonna have. So just to briefly cover our objectives, we're going to look at the types of U.S. business taxes. We're going to speak about choosing the right entity structure. Then we're going to look at the strategic growth and profitability planning that you might want to do
Dima,
in outset.
shall we shall
Yeah.
we talk about C corp, which is as a fairy tale animal. C corp. We need C corp. We need to find this.
Yeah. Well,
C corp.
oh, okay. So yeah. But okay. So I mean, you want to jump ahead a little bit?
No,
You know,
no, Dima.
oh, ah,
It's just a joke
go.
because every time entrepreneurs
Ah,
sending us
C corp.
first request on the US company, they say we need C corp.
Right.
We heard it from our
Right.
friends. They did that.
Yes.
That's what we need.
Right.
Only that.
Yes.
This is
Right. Yeah.
the main
Mhm.
thing.
It's exactly yes. So many people don't realize that C corp is so there are two different, and we just in the moment we're going to talk about. But I agree with you. It's as I said, little careful steps in the beginning can save a lot later on. So in the beginning, we have set a tax system, and there is a 40% tax that may apply on business value in certain cases. Those are objectives for the overall program. We're not going to cover all of it today, but generally that will be objectives of this whole presentation. So for today, so we're going to look at the entity structures. So there's a transparent obviously, transparent entity structures within which we have to be concerned with effectively connected income and FDII income and opaque entity structures. And there we have a tax break called FDII and also trap tax on liquidation. So we're first going to cover the two possible entity structures in the United States. This is very, very important to understand before doing anything. Then we're going to look at the case studies, perhaps already in next time. That those case studies will look at each particular type of software business and those types that I can break them down to provision of software development services,
Oh yeah.
right, selling downloadable articles like down the program to download, pay $50 and it's yours. That's the second type. Then software as a service, providing some online environment where people can go and use it or stream, watch movies, or do anything else. Next, IP, license IP. You can be licensed for resale or to end users as well, like say renewals, annual renewals, that would go under that. And then sell of know-how. So when you sell know-how and this, so we have those five major types of business that software industry is engaged in. Okay, and they're
Sure.
all distinct and right, and the way that you look at what you do will depend on what type of business you have. That's very
Super.
important.
Just
Uh-huh.
prior to your beginning, I just want to emphasize that we shall run it as the lesson, as a school lesson, so not more than 40 minutes. It's our conscious decision. Yes, we discussed this with Dima, so
Yeah.
it feels very fresh, not complicated. It will be very easy for you to digest it, and we're gonna split our talk into few webinars. And so you can prepare your questions or your comments after our first after meeting, and we shall proceed it on the second webinar next week. So just a preview for that. Good. Go ahead.
Yeah, excellent. Thank you. Yeah, we'll try to fit today this. And then the final topic also that important, I believe, to cover is the state taxation challenges. And just one word of preview, even if you're a foreign company, not forming anything in the US, but you sell to the US market, you may be subject to state taxation, even without having US entity. That's what's amazing. And then, of course, US estate tax conversation that I think should be had. Here, I'm just giving really briefly the code sections that we're going to be talking about. So we can go over if you're interested. And those are US forms, as we're mentioning this dreadful form 5472, and then 1120, 1065, K1s that you have to file.
Can you
This is the
please
list of the forms.
can you please just give a brief description? I mean, in human words, or what are these forms about? And also the tax guide or tax rules that you mentioned.
The tax rules we'll look at later, but I think these forms you will hear a lot about them, but I think they definitely so. Form 5472, that's like $25,000 penalty if you file it and you're late, even one day. So it's required in two cases. One case if you run a single member LLC in the US, foreign-owned single-member LLC, or if you have a corporation and the corporation has 25% shareholder, then any transactions with that shareholder or any related parties that are related to that shareholder or to the company need to be reported on that form. And IRS does it in order to see how much money people pay to this foreign related parties or to their managers. just for the transfer pricing, reason. But even if you have $1 reported on that form, you're subject to penalties. So even small cases are very bad. Now the form 1120, you have to file that form annually for corporations and single member LLCs. There's just, again, so there are also some penalties, but penalties mostly stem from this Form 5472. So Form 1065 is filed for partnerships. We're going to talk about what the partnerships are in a second. And the reason for Form 1065 is those K1s, scheduled K1s that each individual receives, where they see their results of the operations of the company. Then under certain circumstances, Form 8805 need to be filed. And this is another important form. If you run your business as a partnership and you have what we call effectively connected income, of which we're going to talk in just 1 second, you have to file this form and show and withhold the tax. So that's sort of another thing in the United States. A, you have to report everything, and B, there are a number of cases where you have to pay tax as entity earns income. They're not going to wait until the end of the year for you to pay tax. It's quarterly. So, or sometimes together with the payment. So this Form 8005 covers some of those cases. Then Form 1140 NR and 1120F, if as individuals or as foreign corporation, you're deemed to do business in the United States, you have to file those forms. For individual 1040, for foreign corporation 1120. Again, required filing. 8832 is entity classification election. In US, you hear about LLC, but it's a flexible type of entity because it has liability for all the members. The IRS came with regulations and they allowed us to elect it to be taxed as either as a corporation or as a partnership. So you choose. You can pick and choose. But you could choose. You could choose partnership and then become later C corporation, but you can't go back. So if you got C corporation, if you try to go back to partnership, tax will apply. Okay, I'm a little bit telling what's I'm gonna cover ahead. And Form
Sure.
W-BAN and W-9, it's withholding certificates for now. W-8-BAN is filed by foreign people who receive payments from U.S. entity, either as a consultant. You can get paid as a consultant from U.S. entity, or let's say you lend money to the U.S. entity, or you like to receive dividends from U.S. entity. So you have to file Form W-8-BAN with the person who makes the payment. And then based on that form, you may or may not be subject to withholding, and the an amount of your withholding will depend also on what you put on that form. So it's very important. Okay, so that's in brief what
Super.
those forms are about.
Now
Yeah.
I know. Now I got it.
Yeah.
Because
Okay.
even for me, it was frustrating all the time. I heard about these forms and I couldn't just structure it in my mind. Thank you.
Of course, definitely. Okay, we're going to start with transparent structures. Transparent structures. What they are, what definition is the entity that is not taxed itself. So if entity doesn't pay tax, but income and deduction items and credits or whatever results of the operation, they all go to the owners of the entity, to the partners or members, depending on what kind of entity it is. And they report them on their personal corporate tax returns. Okay, for foreign members, it's a question what it means, because many countries don't recognize those transparent US LLCs as partnerships. So they might treat it as opaque for that country's point of view. We call them hybrid or reverse hybrid entity. So in one jurisdiction, they're transparent, in another jurisdiction, they're opaque. And what it means, and that was, at least it used to be for some of our planning situations, is when you can make some business income in the US, and yet it's not somehow taxed in your country. So, and now, I personally don't care what's happening outside the US. So that's already solved by other counsel. So here, common types of transparent entities. Here we have LLC, either as a single member, which is disregarded. Single member, it means like it's only one person owns it. And in the US, it's treated as disregarded. So from the US point of view, it does not exist at all. So they look through to such extent they just consider it your just one of the pockets that you have. So you just put it in the pocket. But for the reporting tax purposes, as I was mentioning before, you do need to file a form and 1120, we call it as a pro forma. You don't really show anything there. You just file the empty form, but you have to attach form 5472 to that filing. So even though it's probably if you can fit single member LLC, you always choose this entity is the simplest, the least problematic, the least amount of work and tax, but you have to maintain reporting well. Okay, LLC, and also LLC can be a partnership, taxed as a partnership. If there are two or more members of the LLC, you taxed as a partnership, and then you have to file the entire tax return 1065 and all that. But again, you do not pay tax on it. The income deductions and everything else passes through to the members, and they decide in their countries what they want to do. Now, of course, you also have general limited partnerships. So in US, I don't know how it is in all the other countries, but in US, you don't have to have a formal entity. Two people can just sign an agreement and they can agree. Me
I
and
love
you,
that. I love
yeah,
that.
yeah, right? So it's great. You can just say, hey, we're just going to run as a partnership. Oh, sure, no problem. Why not? You pick a name, you register it in the local office of some sort of city where your office is, and this is it. You get EIN and you run it, and it's a separate entity. Yes, and of course, a limited partnership. Definition of limited partnership here is that you have at least one general partner with unlimited liability. So, as opposed to LLC, where all of them a limited liability. Okay. And the last is the S corporation, which is relevant for uh, foreign people because it only can take US shareholders. But here I wanna say my joke is that I think that there are no foreign people. There are only former US people and future US people.
I love that. That's cool.
Yeah,
That's
that is
cool.
funny.
So
So that's
true.
why
So true.
yeah,
So
that's
true.
right.
I agree with that.
Right. So you then, at some point, if you find yourself in the US, you might consider that as corporation. But usually, as corporations are great when you have a very good, well-run business and it generates cash flow. You basically go with that and you make money. So that's what S corporations are designed, and also for professional corporations like I run an S corporation. Okay, awesome. So then let's see what else we have here. Okay, so as you can imagine, these LLCs are and transparent entities such a perfect thing. You might say, oh, wow, no brainer. I'm just going to go for it. But of course, there are a couple of important traps that they kind of hide there for you. So the first trap is this notorious effectively connected income. Now, what is it? Imagine you run a partnership. Let's say you register US LLC and you open an office there. You say, "Oh, I have an office in San Francisco Bay Area," and you hire a general manager there or salesperson who goes around and does sales and then administrative assistant. And it's, oh, great, but I live outside the United States. They're just there to do work for me, and I'm going to get taxed once, which is true. But the problem here is that you have to file U.S. tax return personally. So in this case, also California tax return. And a good portion of that income will be subject to U.S. tax. So
So,
yes, right, yeah, because that's the ECI, effectively connected income. So basically, in order to have it, you have to have a business on the territory of the United States, and that's what happens. So if you have U.S. office, employees, or physical presence, some of your income will be effectively connected. Then even without the office, you could have some of this, you could have services. Let's say you could have people coming to the United States. Let's just say you service, you provide software services, and your employees periodically come to the United States, meeting with clients and doing some work here. You might get into the CCI situation as well. And then let's say you have infrastructure facilities, warehouse servers, you know, even the Amazon. So if you have, if you do the Amazon, apparently I don't know, but apparently it looks like you can choose an Amazon. Either use US servers or use somehow outside of US servers. So if you use US servers, arguably your income could be considered ECI.
mhm.
And then agents or representatives in US. On this, the number 4 is very, very tricky. So you may not have an employee, but you may have someone who you direct, very narrowly what to do. So you call them, say, you do this for me, you do that for me, and go here, do that, as if they're your legs and ears and hands on the ground. They, in this situation, they become your representative, your what we call dependent agent. They dependent on you. You pay them, plus you tell them exactly what to do, where to go, and how to do it. And if it's deep enough, is that connection deep enough, that creates a effectively connected income. Of course, chances of this to be found out are very, very low if you don't formally hire somebody as an employee. But when it comes to huge cases, like big cases, they look at it very, very closely. And they can, because usually IRS, if it's big money, they call in experts, they call in witnesses, and there's no way. I mean, it's very hard then to kind of to hide anything.
And,
All right,
and
so that's
I would add to that that they act not as the formal bureaucracy. They act as the from the entrepreneurial perspective. So they understand how the business works, how the software business works, how the outsourcing business works. So you cannot just tell them some business bullshit that they are not familiar with. They're definitely familiar with all types of businesses you run, and that is why every time, especially outsourcing companies who wants to find, I mean the teams who wants to find clients for themselves in the U.S. Actually, even without the presence in the US, they have agents, they have representatives. At some point, they have quite active life in the US. And at some point, they could be subject to this trigger, right? So every time,
100%.
every
Mhm.
time you're looking for the partnership in the US, you should always ask yourself, uh, it, could it be a risk for me when in future maybe I should double check it with someone, even with ChatGPT, because US has all the possibilities, IRS, to check you from knees, from head to toes. It's very easy for them to do
That's
that.
right. That's right. And plus, I think now with this all this Dodge and Elon Musk, they're probably going to, come up with all sorts of AI tracers, trackers, and things like that. So that's only going to get worse in that respect. Therefore, the movements are more. Okay, great. That was a great addition. Thank you. So, okay, so let's look specifically. What does it mean? What Jenny just said. Okay, let's imagine you get into the CCI. So as if you're individual, as you earn that ECI inside the United States, they have to withhold 37% quarterly on your net income. So they have to send 37% every quarter to the IRS. And then at the end of the year, you file not at the end, next year by June 15th, you file your personal tax return here in the United States, or your corporate tax return, whichever the case may be. And you report that income. Okay, well, this is for individuals, right? So you report that income, and your ultimate tax can be lower, and then you can get a refund. But the prepayment, they want the full 37%. So similar situation for corporations, but corporations pay 21%. And plus, if they remit anything, if they send money home, it's 30% up to 30% branch profit tax. So if it's a normal country, so to speak, in the regular with which US has a treaty, it's usually 5%. But if it's some sort of island, like British Virgin Island, so then it's 30% withholding tax on that earned on this on the rest of the 79%. It can get expensive, ECI again. So all right. So then again, I said, well, must file tax returns and also must file forms 1065, because transparent entity, as we discussed, partnerships, they have to file form 1065 and issue schedules K1s. So that would be the trouble if you're ECI, and it doesn't need the whole thing to be ECI. It can be prorated. Some of it can be ECI, some of it can be not ECI, but one must sort of remember that.
Dima,
okay.
just one more clarification. So let's make it just clear for our viewers. So that if you run, for instance, outsourcing software developing company, right? You sell your services to the US based clients. Okay. You, for instance, sell for $500,000 per year. It's a normal regular income from that market. And for instance, you also sell for 500,000 for the rest of the world. You established LLC in Delaware, for instance, right, for these purposes. So how can this trigger ICI, right? How can this trigger ICI work? So can you make it can you describe it?
Example, yeah, of course. Okay, so it can be easily triggered. For example, you run business, but you come to United States for, let's just give you like 3-4 months a year. Okay, and after a couple of years, you maybe establish a place where you regularly coming to. And I have to say, this sort of rules, ECI rules, they're very fuzzy. They're fuzzy, right? So you can sometimes on almost same facts, you can argue for or against ECI, okay? But what they're trying to capture is that, are you targeting US market? And if you are targeting US market, do you have something substantial on the ground that's doing business? So if you come into the United States for, let's say, 2 weeks a year for some conference, that's probably going to be okay. If you come here for 3-4 months regularly every year, I think that you will create ECI. Anything between that, it's a question, because there is an exemption in the code. It says We're going to ignore situations where you come here for less than 90 days and you earn less than $3,000. But $3,000, as long as I remember myself, that was the amount, like almost 30 years. I mean, I was as long as I remember those rules, almost 3,000. So it's super under, right? But still, what it means that 90 days, maybe you have to pay a little bit tax
So
on something about it. Yeah.
So it means that if you're as an individual, you could face this uh, that's a tax request from the IRS to report on your income, right? And you could be
Yes.
subject
Mhm.
to this tax, even if you're a foreign citizen and you just come from time to time to the US. But if you run LLC there, you have
Mhm.
some interest on the US market, you could be subject to this taxation, right?
Yes, you could exactly that's right. That's right. I mean, you can make a point that yes, but when I come, I half of it for vacation, half of it for I don't really do any work here. I just look at the market or some other things. There's to do some sort of irrelevant meetings. But and you can say, well, I go to different locations. It's not really one place. I don't. You could
But it's all
try to
time.
do something, but the more.
This is
Mm,
time, efforts, and money on your advisors while you explain this, right?
yeah, that's right. Exactly. Yeah, yeah, yeah. So if you right, but this is excellent point. If you are going to do something like that, and if your business is good, substantial business, you could create a separate entity that just does that. And yeah, maybe in the future, we can cover some structures that can combine an LLC and a corporation, and corporation takes care of one part, LLC takes care of another part, and um, so there's no conflict. But potentially, you could do that in some cases. But it's not only your personal presence, as I just mentioned earlier. It could be your best friend or maybe somebody you hire, and you
Mm-hmm,
call them. Now you go here, now you go there, now you do this, and they just follow exactly your instructions
mm-hmm, mm-hmm,
on the ground for you. So
mm-hmm.
that's
Yeah,
already
thank you.
a candidate, ECI candidate. Um, okay, so that's how it can be, right? Okay, so FDAP. Now FDAP is the reverse problem. Is the reverse problem. If you do not have an ECI, if you don't run business in the United States, and you don't argue that you run business in the United States, and you generate a certain income, um, which what we call fixed, determinable, annual, or periodical, meaning rents, royalties, interest, dividends, some kind of leases, this kind of things. If you make that for some reason government considers it passive or somehow fixed, determined, annual, periodic, special type, they will charge you gross up to 30%. So 30% unless you have a treaty. It's 30%. They charge you 30% on this. Is amazing. And it's a gross. So you made $1 million for something like that. You've been not careful. Maybe you license some IP to the to the United States company. You have a foreign, I don't know, BVI company owning, let's say, disregard the single member LLC in the United States. You have no US presence, no US business. You're gonna get taxed 30% on gross. Okay, so that's ridiculous a little bit, but okay, that's the result. And that's actually, I think, maybe our value of the presentation is like if anyone is trying to do anything like that, licensing IP to the US, you have to think carefully. It could be okay. It could be okay if you can use treaty. If you can use treaty, usually, very often treaties show zero rates for Ukraine. Ukraine, I think it's 10%, if I'm not mistaken. It's just a good. I'll look it up
Mm-hmm.
later. I think it's 10%, not mistaken. So maybe it's not too bad in that sense. But uh, if not careful, then it can become a problem. All right.
So I've just
So,
just a small point on that. It's not only about taxation and the risk of taxation. First of all, your IRS finds you on the map, so you're flagged, right? So this is one point. It's already not so good. Second thing is you spend a lot of time on this interaction with them. The third, expenses on the consultants, and the fourth point is that you're gonna be on the map, as I mentioned on the first point, and it means that you're gonna be probably detected, and you should be super careful on the next steps. So it's not only about taxation as a risk, right?
mhm. And also, you know what I noticed amazingly? I just had just one client that just giving him a hard time from Google. So if you run something like that and you sell through Google, they would require, they either going to do withholding or they would require you to show if you file US taxes and things like that. So if
Oh,
you sell through those, yeah. So now right. So it used to be that Amazon was pretty sophisticated and up to, and Google was also a little lackluster. And now they somehow become very strict. From what I see from one of our clients, like giving hard time, not giving him money. They're requesting a bunch of information, and it's becoming a little bit of a headache. Because he does have this transparent entity type. Of course, he's like for him, it's not exactly this. It's not exactly the feed app, but still, they just you know. Anyway, so you have to be careful from that perspective as well. So not financial yes income, right? Okay, so that's our feed app. That's our feed app. Now, of course, advantages, as we discussed, we talked about that is one level of taxation. Maybe it's ECI, but maybe it's not too bad for you because ECI is taxed on net income, and you have you paid yourself, you paid somebody else. Net, let's say I don't know, 50,000. Maybe on your example, after 500,000, 50,000, you can say this is my net profit. You pay, and maybe you're very happy with that, which is perfectly fine. Then you know, if you have foreign source, you know, another I think one of other reasons why you might want to create US entity is because of the infrastructure convenience of doing business through the US, and you can run your business through US LLC, having foreign clients, I mean clients that are not in the United States. So in that case, even if you have ECI, under certain circumstances, the foreign income, the foreign source income will be non-ECI, and you don't have to pay tax on it. You know, maybe you don't have to pay tax in your home country either. So that's sort of questions, but a good possibility. Simplified operations. So obviously LLCs are more efficient than corporations. You don't have to have annual meetings, corporate formalities. It's basically, you know, have one agreement and you can run forever in this. Flexible profit sharing governance. You can bring partners, remove partners. You can actually also remove IP, bring IP. You can do whatever you want to do with LLC. It's quite easy. And cost effective here, I could argue because of sometimes you have to file your personal tax returns. It may not be as cost effective, but it seems. But again, maybe the taxation will be lower, and therefore it will be, in that sense, cost effective. Okay. Then, of course, transparent entity. Another key benefits. So, U.S. tax exposure is not there. Minimal compliance.
Could you
Yeah.
please specify what does mean deferred U.S. tax exposures? I don't get it.
Um, this probably is not precise. Is not precise. What I think I'm trying to say here. Uh, you remember, and we're going to talk about it a little bit later. I don't know today or later. is about sourcing. Okay, so deferred is not the right word here,
Uh-huh.
but there is a you as I was just pointing out just before. Remember sourcing, so you can play with the source of income. Sometimes you can make things U.S. source, sometimes foreign source. It depends on what services you provide or what SaaS you provide, and you can play with that considering your home country as well. So it's a little more like extra layer, but it's more flexible. Whereas as with C corporation, you pay tax and you pay tax. You cannot play with that source. You cannot move in and out. That's what it means, I think.
Wow, that's cool.
Yeah. So minimal compliance. Okay. Again, so as we were talking, I won't be tired of mentioning it. The single member LLCs need to file pro forma 1120 and 5472 is really minimal, but must be done. No withholding or dividend tax issues. So when you, let's say you make money through that LLC and you just take money home, there is no tax. If there is no ECI, everything is good. You make money at the LLC and you take it home, it's free because it's kind
Wow.
of taxed to you. Yeah, because it taxed to you, it's not taxed at the entity level, therefore it's already your money. You just
So
take it and you go home. Mhm.
let me clarify that. So it means you earn 100K on the US market, right? For software development services, right? For selling or marketing or digital marketing. And
Mhm.
you're resident to Portugal, for instance. So it means that your income on the LLC level will be on the 0 point, right? So there won't be
Yeah,
US taxes. It means
yeah.
that you're going to be subject to the Portuguese taxes, right? In this case, as an individual.
Mm, maybe, yeah. But again, so
If
you
you're
would have to
Portugal.
find out from Portugal if they consider that it's transparent, and you will be taxed automatically, or you'll be taxed when you withdraw the money. So that's the question. Yeah.
I see. But anyway, there won't be taxes on the LLC level, right? In this case, if you're
Yeah,
foreign.
no taxes. Right. No taxes, no sales. See, that's why transparent will like transparent,
Yeah, there's some sense in that,
Mhm.
indeed. There's some sense in that.
Yeah.
You know that.
And another thing, right. And then another one, another added flexibility is that you can start from the LLC, transparent entity, and then later on you can elect to be C corporation. No
Wow,
problem. You
wow.
pay, right? You pay no tax, remember? So LLC is a fun, or even if you, let's say, in a partnership, or if you're an LP for some reason,
Got it,
you
got it.
can then take your assets and contribute to a C corporation. And that's amazing, I think, because there is no tax involved. So if you need C corporation later on, you can do it. That's why this structured transparent entity, I would say in on many circumstances, I think it's safe to start. I mean, unless you do the royalties and rent and licensing. If you're in a licensing business, that's probably going to be a little tough. But outside of licensing business, everything else, you can
Hmm.
probably start with LLC, see how it goes. See
I
how it
see.
goes.
Cool.
All right, so that's it. And then, okay, so now I'm ready to talk about opaque entity taxation. Do we do it now, or we leave it for the for the future?
We discussed, first of all, we already passed the time limit, right? We
Yeah,
exceeded,
that's right.
yeah, for 45 minutes plus intro talk. So
Yeah,
could you? I've never used this word OPEC. How do you spell
yeah.
it? OPEC.
Opaque, opaque
OPEC.
entity. Yeah. So
Wow.
opaque, and I frankly don't know because it's so funny that in US people really like making things up, making things look very complicated, sophisticated.
Yeah,
You
that's
know,
true.
they love it. This is like national sport. And so rather than, or on the one hand, on the other hand, it's okay, opaque because there could be more than one entity type that you
Uh-huh.
have to pay tax on. For example, certain trusts, you also have to pay tax on the entity level. Certain
Uh,
other trusts, you don't. and then let's say you have a C corporation that's also opaque. Opaque, it means you cannot see through that, you know.
I see. I see. Got it.
Um,
Thank you. No, that
you
makes
know,
sense. It makes
it's there is this one funny joke is that when transparent when a partnership or LLC met a C corporation at a party, they said the LLC said, "Well, I like your dress, but I prefer something more transparent, something like that." So, anyways, I know.
that's
So it's
lovely.
crazy, right? But this is joke, This is it. So basically, so this opaque thing, yes, for us, for our purposes, it's C corporation. Now, it's possible to create business trusts as well, but I've never seen it done. So it's possible, but I've never seen it done, and they would be taxed as corporations anyway.
Okay, so in this
So,
case, Dima, I
mhm.
think it would make sense to make yeah, break with that,
Next,
and
yeah. Mhm.
to postpone it on the second webinar, because even for me it was quite a challenge to digest things
Yeah,
that
I
you
agree.
told about, and it's not. And now I got the point when entrepreneurs do not want to deal with that. They got into that, they stuck in these things, and they just,
Right.
I'm done with
Yeah,
that.
yeah, yeah, yeah,
So
yeah.
let's make a pause. We'll give some time and chance to digest it, to look through
Mhm.
that, maybe to look one more and listen it to one more time. So let's finalize it with maybe 2 3 advices from your side on the transparent entities. How can you wrap it up this topic and give some let's say wise
Yeah.
advices to the people?
Okay, yeah, yeah, yeah. So, very simple first advice. If all you do, you provide services from outside the United States, there is probably no good reason to create anything else but an LLC. It can be
Oh,
partnership, it can be single. Yeah, yeah, yeah. So there is no good reason. The only two reasons they're not necessarily tax reasons, or put it this way, not U.S. tax related reasons. So A, as I was saying, those transparent entities sometimes by this platforms they're not trusted somehow. You have to prove them too many things and explain them too much. Sometimes this is problem of late. Not it didn't used to be that way.
true.
And secondly, sometimes uh, let's say if you use US entity also to do business with other countries, like for example India, no, that don't like that, or other countries, you have to give them US residency certificate in order to be exempt from withholding or things like that. Now, you cannot give it to them unless you are an opaque entity, or if one of your partners is a US person, in which case, if that one of your partners is a US person, they will only give you by how much he's your partner. So one time I had another client, also Ukrainian, and we had a situation where they really had to have it. And they say, well, we can't give you because it's a partnership. You guys all foreign. It's like, oh my God, what am I doing? So we created this one corporation, and they took 1%, 1%. And because IRS told us, if you have at least one US person as a partner, we're going to give you this certificate. And we're happy. We created a corporation, gave them 1%. And then what happened? They send us certificate and they say 1% of this company is a US resident. They
Wow.
just
But
messed on us.
did it work? Did it work for the
I don't
counterpart?
know. I don't know, but it was fine. They just went. They
I
just say, "All
see.
right, whatever we have, we have." They probably put 0 0
I
later
see.
on. They just went and changed that zero. Anyway, that's okay. Those are two cases where I could
Mhm.
say maybe, yeah, you might, if you have situations like that. So you might need C corporation, but it's very specific. I would say mostly you probably perfectly great just to be LLC. And another point we did just make it is that okay, I mean, unless you are in licensing business, you can simply always start with LLC and see how it goes. Well, I guess another point regarding LLC, if you want to raise money, that might not also work very well for US investors. But if you want to raise money outside the US, and if your business is, I don't know, provision of software services, the outside US people might say, you know what, I want LLC. I don't want to pay, corporate tax in US and all that. All that maybe it will work. So it depends, when you raise money, it depends. You have to talk to your investors.
Good.
Yeah, yeah. So I think that's good for now. I mean, we're going to talk about a lot of important, interesting things next time, and we'll come back. Right, we'll come back to this transparent entities types as well.
Right.
Because
Cool.
it's always interplay between the two. Always interplay between the two.
Well noted. Well noted. So thank you so much, Dima. There are two very passionate visitors and listeners, and who were the whole time with us. And
Awesome.
that's great. Thank you, guys. Do you have any questions, maybe comments, or you can save them for the next meeting. It's very easy to connect next time after you digest and go through all this material. We're very happy to start this journey on the US taxation. We're happy that we did that first dance, and it's gonna be next week, the second one. We plan to make it second next week, and we'll go deeper into this OPEC entity levels. And everyone who is watching us on YouTube or on other platforms, please take a chance to write down your questions and comments. So we shall start our next meeting with answering those comments and questions. I think it's always good to have practical perspective, because that's basically, as we call, the meat of the whole process, the whole discussion. So everyone, thank you for watching us. Thank you for being with us. Dima, thank you so much for your time. I'm very glad that we did that, and I hope to see you soon next week.
Okay, sounds good. Thank you, everyone. Bye bye.
Bye bye. Bye bye.